Wednesday, February 27th, 2019, Maneco 64, home of alternative economics and contrarian views. Many might say that I have extremist views, especially people in the mainstream, economists probably in the City of London, central bankers, the IMF, the BIS. But I'm going to prove to you that it's the other way around today, and especially with the subject of interest rates. Many of you have been asking me about all the talk of negative interest rates coming back, especially with the world economies slowing down. I personally think we're already in a recession, and there's a lot of talk now of central banks going further, deeper into the negative part of the, interest rate curve, going more into like -3 or -4%, which in my opinion is crazy. I will I'll give you an analogy for it after I finish looking at the markets this morning. So, there's an old book about extraordinary popular delusions and the madness of crowds. This is a truly delusional idea, and it's the madness of central bankers. This talk about negative interest rates. In my opinion, it's turning the world upside down, and I will talk about what I think it means. Before that, of course, I'll look at what the markets are doing this morning. It's 8:20 a.m. London time. So we've got spot gold 1326.09. It's down about $3. The range has been 1325.60 to 1330. Silver 1584, down 8 cents or 0.5%. The Dow is down 75 points. The Dow futures down over 1/4%. S&P 500 is at 2784, down about 8.5 or 1/3%. The NASDAQ 100 future is down 30 or 0.4%. Are we going to crash? A lot of people are calling for a collapse or a crash. Things are so screwed up. I'm not sure what to think. Technically here, you can see the S&P has formed a quadruple top. We had a top in October here at 2820. We had a top in November at around the same level, 2817. And then in December, we had a top at 2810. And more recently, on the 25th, so on Monday, we had a top at 2813. And it looks like we're turning back down. So we'll have to wait and see. So currencies, the pound is continuing to strengthen here. There's a lot of talk now that Brexit might be delayed. We'll have to see. So that's given the pound a boost. I personally think if we stay in the EU, it will mean nothing for the pound in the longer term. The pound's still going to go down against tangible goods. There's no other way. Pound is 132.73 right now, up 21 pips. So we've gone back below 1,000 in the pound price of gold. Am I concerned? No. And I'll tell you why when I talk about negative interest rates. Euro 113.92 unchanged. Dollar down 0.2% against the yen, 110.37. And the dollar is unchanged against the Chinese currency at 668.50. Crude oil back up. We're almost back up to 56 in WTI. It's 55.96, up 0.5%. Brent is at 65.50, up 0.2%. Bond market, 10-year yield right now. We dropped quite a bit yesterday. We're down at 263, roughly, the 10-year yield. The 1-year to 5-year yield spread is still negative. It's right now actually -9. So that's inverted massively. And we're even now inverted between the 1 and the 7s. That's a bad sign, in my opinion, as well there. Negative interest rates. So many of you have asked me and told me about, you're seeing a lot of news about IMF saying we could go to -3, -4 the next downturn. And you look here, if you Google negative interest rates, you get very recent stories. Negative interest rates is a big topic, says Rick Santelli from CNBC. Negative yields and negative rates spell disaster. That's from World Alternative Media. Well, we'll see. Negative rates may happen in no-deal Brexit chaos, warns former Bank of England man. Even the IMF, they have a blog, blogs.imf.org, insights and analysis on economics and finance. Very, very extremist, in my opinion, IMF. So their story says cashing in, how to make negative interest rates work. So they're looking at this, and I've read this little article, and I suggest you read it. I put a link below in the description. And they're saying that there's very few countries, except for, countries like Turkey, Mexico, and Iceland, that have room to cut rates in case there's a downturn and a recession, which I think is very probable, and we're probably in it already. And it's interesting that they don't talk about the fact that Iceland was one of the only countries that jailed the bankers. They let their banks collapse, and now they're in a position to protect themselves again, if there is a downturn. They don't seem to touch upon that. They ignore that, of course. And basically what they're talking about, they point out that there are countries that have negative interest rates right now, even though they're not past 1%. They say that the problem, of course, is that you need a cashless society to do that. And at the same time, though, they point out that it's very hard to institute a cashless society at the moment, because cash is still king, as they say here. One of their proposals, though, is to solve that problem by having an electronic currency and cash, to have a dual currency system, so that if let's say interest rates are -3, and you take the cash out of the bank, and in a year's time you put it back in the bank into eCash, that will only be worth 97 of the eCash. That's quite perverse. I mean, there are countries, and I'll show you here, there's many countries that have negative interest rates right now, more than you would think. And it's getting quite common. Switzerland, for example, as you can see here, they've got negative interest rates or yields all the way up to 15-year, Swiss government bonds, as you can see there, negative. Let's see, Japan, of course, they've got it up to the 10-year yield, so minus 2.7 basis points. Who else? Well, Germany, of course, all the way up to the 9-year. The 10-year is still positive, as you can see. The ECB rate as well, their official rate is negative. You've got the Scandinavian countries as well. Denmark, all the way up to 8-year, you have negative yields. Sweden, all the way up to 5-year. And even the Netherlands or Holland, up to 6 years, you've got negative interest rates. So what does that mean? My analogy for negative interest rates is if you go to a petrol station, as we call it in the UK, or a gas station, as you call it in the US, and you start filling the tank of your car with diesel or gasoline or petrol, what will happen is that fuel will go through the tank and is siphoned back into the gas or petrol station, and your car is basically empty. And so how do you operate a car? Well, you push it. So that's my analogy for negative interest rates. The lender will keep paying the borrower to borrow, which sounds perverse, and it's basically as well a bailout of the system, because you keep giving money to the borrower because he can't pay you back. It's totally perverse. Why do the central banks and the IMF propose this thing if it's so crazy? Well, because they're trying to keep a zombie system, this fiat money, endless debt system going. And they think that if they do this, people will start spending their money, because if they leave it in the bank, it's going to lose value. Now, I think we do have inflation. It's just that they're lying about it, because this system, they need to keep the price of paper assets high. That's the other thing this will do as well. There's going to be a rush from the big speculators, the big hedge funds. They're going to make billions. And how they're going to do that? Well, they're going to start buying government bonds, all these government bonds, because what does negative interest rates or dropping interest rates mean? It means higher prices of bonds. And what are they going to do the lower it gets, the more negative it goes, you get something called convexity in the bond price. That means the bond prices will explode. And these speculators are going to make they're going to really go to the bank on it, if I can say that. And, who are they going to sell it to? Well, to the people, to the greater fool. And they're going to make billions. And the people who are going to be hurt is the general public. And especially now with the demographics of the baby boomers retiring. It's going to hurt the baby boomers, because they have capital, maybe in their properties, stock portfolio, but they will not be able to get an income. I think it's crazy. Of course, a lot of people say that it will be great for gold. It should in the normal world, and we'll have to see, because they can manipulate everything. People might, instead of buying gold, will start buying bonds. Who knows? I personally don't want to be involved in this game. I'm not going to be speculating on bond prices. What could go wrong? Well, I mean, something could go wrong, because this doesn't make sense. People might wake up and say, wow, what's happening to the petrol or the gas? We're putting gas in the car, and it's being siphoned back to the gas station or petrol station. This is completely wrong. People might revolt. And even in France, the country of the yellow vests, we have negative interest rates up to 5 years, as you can see here. So, yeah, these people are mad. I think it's the Keynesian mentality that if you tweak, PhD economists, they don't think about the real world and how people will react. They just think, oh, if we make rates negative, people are going to not leave their money in the bank. They're going to spend more, and things will be great. They don't think of the consequences and what it really means. It turns the whole, how can I say, idea of money and markets upside down, and it punishes people who do the right thing, who create value, who work, who try to save, to invest. That's the other thing. It will make speculation even more prevalent. There won't be true grassroots or real savings and investment. It's very dangerous. And I've got here the handbook of Fixed Income Securities by Frank and Dessa Fabosi. This is supposed to be the Bible of the bond market and interest rates, fixed income securities. That's what they are, bonds. And I went into the index, and I tried to find something on negative interest rates, and I found nothing. That's how crazy things are getting. Yeah, and it's going to get crazier in my opinion. So to be honest, I don't really know what the consequences are going to be exactly, but they're not going to be good. If you enjoyed this video, make sure you hit the like button. Subscribe to my channel if you haven't yet. Make sure you also hit the notification bell to be notified of my videos. And you can also follow me on Twitter, Steemit, and DTube. I wish you all a great day. Take care. Bye.